Welcome to Daxue Talks, a show powered by Daxue Consulting, a China-based strategic market research company founded in 2010.
Hello, I'm Marc Burban, founder of Asian Risk Management Services. We are an insurance broker specialized in general insurance. General insurance provides coverage in every situation where an accident may occur. We help our clients to mitigate risk they may face through insurance coverage. We combine an international and local expertise.
When do companies need liability insurance? Can you give an example based on your experience in China?
The first liability insurance company in China is employers' liability insurance. Okay, the reason is whatever after a labor accident, whether the employer is liable or not, he must pay for medical expenses, loss of income. I'm going to give you two examples. The first one in a company that pay more than 300,000 RMB for medical expenses and other expenses to staff insured. This company was doing a plastic injection, so manufacturing any kind of parts, components with plastic. And one of the workers working on the plastic injection machine was injured. A piece of plastic, hot plastic, hit his hand and burned the hand. So he has to go to the hospital, and it was very expensive. And of course, he cannot work for a few months, so the insurance company, the employer has to pay 300. They have insurance, so the insurance takes care of these expenses. That's the first case. A second case, so even when a company has not a labor contract directly signed with an employee, they might be liable of any labor accident, meaning they might be liable to pay any expense. So just an example we had before, so a company that hired staff to a labor agency. So basically the labor contract was between the labor agency and the staff. Then the staff was working for the company. And under the contract between the company and the labor agency to provide staff, there was a clause saying that the labor agency must buy employers' liability for staff hired on behalf of this company. However, after an accident, the company found out that this labor agency did not buy this kind of insurance. However, as this person was working for the company was held liable and must pay from his own pocket the medical expenses. Another case for which insurance might need liability insurance is for companies manufacturing product export abroad, manufacturing or trading product exported abroad outside of China. We do have one example, a company doing price filter that was used for in the mining industry for wastewater, filter wastewater or mud. One of the staff of the company, of the clients of this company, was killed when working on this equipment. It's quite hazardous. Big equipment is quite hazardous, and it was in the US. So the company has to pay $5 million to the family. So it's of course a big issue especially in the US, for the company trading or manufacturing to the US market. They must buy liability insurance. Okay, so that's of course for every situation you must have liability insurance, but I would say this is the most pressing issue, the most pressing issue where you must buy insurance, liability insurance.
How does the development of e-commerce affect product liability insurance in China?
Yes, in e-commerce, the issue is the sales and the delivery of a good are separated. It's two steps. So the seller does not have a full control on the delivery process. So it's a combination of, once again, liability and property risk. From the seller point of view, his duty, he has to make sure that the goods are delivered in good condition and on time. So just to summarize that in two questions. So the issue are, do the goods are delivered on time, in good condition, sorry? And do the goods arrive at good location, at final destination, sorry, in good conditions. From the seller point of view, he has no control of the delivery process, the shipping process, and of course, he has no control about when the goods arrive at final destination. So it means, for instance, when the goods arrive at final destination to the clients, to the buyer, the buyer may say the goods are damaged. The issue for the seller, he has no possibility to do an on-site loss survey to assess if the goods are damaged and also to find out the cause of a loss. So in this case, everything is based on the good faith of all parties, the shippers and the buyers. So once again, from the seller and from the insurance point of view, the product you need is more like what we call a performance guarantee insurance, meaning whatever may happen after the sale, if there is any issue with the goods arrived at final destinations, if the goods are not are damaged, the seller may indemnify, reimburse the buyers. So in this case, the insurance company may pay. So this is once again like a liability. It's a liability issue, and it's also it can be very difficult and hazardous for the seller, especially with goods like frozen goods or foods. If there is any, if the frozen chain is broken, and so if the clients eat the food, they can be intoxicated. And once again, in this case, the seller has no possibility to prove is not liable. Commerce changed a lot the market, and once again, we are working on that kind of product, and it's more or less. So we combine usually marine insurance, so transport insurance, and we add some special clause to make sure that it's like a guarantee insurance. The only things that can be taken out, that must be taken out separately, is for that insurance.
Any questions? We will find an expert to answer them. Drop your questions in the comments or send us an email, dx@dashwayconsulting.com.